Good morning. Market Day Report on the air. How about we jump in and, we're still 15 minutes away from opening up the day session. So let's look at what we did in the overnight session. We'll start with the corn market and lower trade here. December down 3/4 of a penny at $4.26 a bushel, and the deferred contracts were all in the red as well. Now to soybeans. November 2.5 lower, 10.41 1/4. Roll out to the July though, 10.98 1/2. We slip below that $11 level, but just seeing 11. And soybeans, even if it is one of the deferred contracts, that is, I guess, somewhat encouraging, right? How about the wheat market? We'll look at next year's, the new crop, the one that's planted or being planted. July, 568 1/2. That's a penny and a quarter higher. Hard red, July is the new crop again, 564 1/2. It's a tick higher. And then the cotton market is moving lower, down a little over 1/2 cent at 66.69. Well, we bring in Brian Hoops. Brian is with Midwest Market Solutions. I'll tell you, it's hard not stealing a little of your thunder. We've got a flash sale, and we had some strong weekly export sales.
Good morning. Yeah, it's kind of fun to talk about a flash sale every once in a while. This is our second time this week of talking about a corn sale. This time it's 110,000 metric tons sold to Mexico. They continue to be by far and away our best buyer. So export sales were out this morning as well. And for wheat, they were not all that great, only 13.9 million bushels. But corn and soybeans were very good. We saw corn at 48.5 million bushels, soybeans at 33.9 million. As I mentioned, Mexico continues to be our best buyer of U.S. corn, and I think they will continue to do exactly that. Noticeably absent, of course, is China. They were buyers of soybeans last year about this time of the year, but they haven't bought anything from the trade at all in 2025 into the 26 marketing season. There is a conference call apparently tomorrow with President Trump and President Xi. They have not spoken since about the 6th of June. So the trade is hopeful that this call will lead to more of an agreement, or at least a commitment that China will start purchasing soybeans. And, I know there's a lot of talk about prices depressed because China's not in the market, but let's look at the facts here. A year ago on this date, soybeans were about 30 cents cheaper than where they are now. And that's without China in the market, and that's with the U.S. producing record yields. So we have less soybean acres planted. The farmers responded to that market direction. They planted less soybean acres than a year ago, planted a lot more corn. And these markets, as we go through harvest, probably going to be very choppy. We've seen a lot of trade where it's very choppy between trading ranges, and it feels like that's where corn and soybeans are in, is just kind of fighting those trading ranges with a little bit of an upward tint to the marketplace since middle of August.
So, Brian, we focus a lot when we talk exports on China, but China is in the market, well, for one of our other commodities. We'll take a break and we'll come back, talk about where China is buying, or at least what China is buying. Market Day Report continues in a moment. I'm not real sure how many we actually sold yesterday, cash trade in Texas, but Packers did get a few for $1 less at $2.39, but it ended after that. And even in Kansas, they're passing on bids right now at $2.40, so we'll see what has to happen over the next, 48 hours or so? Find out what Packers will have to pay to get a few more cattle. Speaking of cattle, live cattle futures in the red. Yesterday, October at 231.47. That was a $1.97 lower, and the D's at 233.10 was off 205. Actually, both live and feeder cattle have been lower for 2 consecutive sessions. September yesterday settling 355.50 off over 280, 440 lower on the October at 349.90, and losses of 447 to 477 on the deferreds. And even the hog market yesterday in the red for for the second consecutive session. And we bring up milk, but we'll get back to hogs in just a moment. Milk prices in the overnight session moving higher. Now back to hogs, where we settled in the red at 87.70 off 52. Brian Hoops, Midwest Market Solutions, talking about China, talking about U.S. exports. They are buying from the U.S. when it comes to proteins, right?
That's right. Yeah, they're good buyers of pork, and they will probably continue to be great buyers of U.S. pork. That's the one thing that they are stepping in and buying. So our sales last week for both pork and beef were pretty decent, maybe a little bit above where we have been over the last 3 or 4 weeks. And so nothing that really stands out to us, but at least it's a solid export numbers. There was some cash cattle trade, as you alluded to yesterday. A little over 1,000 head traded in Texas between 238 and 239. A lot of the bids were 238, and they did come up to that 239 area. So we saw $1 to $2 lower cash trade, very much as expected, but it was only 1,000 head. There's still 239 bids in Kansas this morning. And on a dress basis, there's some 375 bids out there. We're still looking for more trade to develop. It may not happen till tomorrow when we get that cattle on feed report. Our cutout values were sharply lower last night. Once again, in 2 weeks of time, we've lost close to $30 in our cutouts, and that's really hurt the packer margins. They are estimated to be now in the red, about $92. That is a big swing from just 2 days ago when we were about $3 to the plus side. So Packers are going to have to do something in here as far as cutting kills to prop up those boxes, something along those lines. But they are going to pay a little softer cash money this week. That'll help their margins improve a little bit. And then, of course, tomorrow, cattle on feed in the afternoon looks to be bullish because of the placement numbers. I really wouldn't be surprised to see cattle try and open firmer in the front month, and especially in the live cattle this morning.
Yeah, good points there, Brian. Great to see you. Brian Hoops, Midwest Market Solutions.